What's up, guys? Welcome back to another video. Today will be a little bit different. We're going to be talking about habits and trading psychology of winning traders. Alright, so let's jump into it. Managing emotions. When trading, you will be facing a whole host of emotion that is tied to money at stake in your account. These emotions are greed, fear, doubt, hope, and excitement. To be a winning trader, learn to think, act contrary to these natural instincts, and many of our emotional patterns make us lose money. When we are conscious of these patterns, we can overcome them. It is advisable to trade at a level of capital and risk where a few losing trades does not hurt you emotionally. This level depends on individual pain threshold. So now, for example, if you risking if you have a $20,000 account and you're risking 1% per trade, which is reasonable, $200, and you find that risking $200 per trade is a little, you know, pushing your threshold by itself. Size down, go to $100 risk, $50 risk, $25 risk. It does not hurt you to size down. It actually helps you. You can think of the money that you put at risk as your tuition. You want to pay least as possible while learning to trade stocks efficiently. And until then, you can size up. And this is something I'm working on myself. This is something I'm working on every day. I've found a dollar value that I feel comfortable trading with, and now it's only up from here. Alright, so now let's get started with the first emotion. Greed. Greed may cause you to raise profit targets too high and stay in a trade too long. This can cause future winning trades to become a losing one. Alright, now we can get an example. And let's say Roku Friday chart. Let's say you got your resistance, pre-market resistance, support. This is its range. This is what it's trading at. Okay, try to break down, and now you want to get long at 161.24. 161.24, and then you're risking 61 cents. So you want to make 1R. Let's say you just want to make 1R. Okay, this is a normal trade. I'm gonna make a 1-1. So now you get your 1R. Boom. Oh man, this looks great. Okay. All right, this looks fantastic. You're already up 1. Okay. 61. All right, nice. This is looking amazing. Now it's created another support. I'm just gonna keep holding. I think this thing can do more. I'm not gonna take a partial. I'm not gonna do anything. I'm just gonna wait till it breaks, creates resistance, and then breaks out of its high. So now it creates its resistance. Okay, I'm still holding. All right, this is perfect. This is looking great. It's pulling back. Okay, it's at support now, and now we just want to see a continuation to the upside. All right, now it's holding in its range. Okay, now it's in a range right here. Now we want to see a breakout. I'm not going to take partials because I know if I don't take a partial and I get what I'm looking for, I can make like 500 bucks on this trade. All right, so okay, now it's trending up. No. All right, okay, yeah. All right, let's let it recover a bit. Let's let it recover. All right, okay, nice. Okay, we're getting a green candle. This looks way better. Okay. All right, okay. All right, let's look for it to the highs. Let's look for it to the highs. Oh no. All right, okay, this is looking good. This is looking really good. All right, now it's about to go to the highs and break out. Oh shoot. Oh no no no. Oh no 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 no. I had a chance to take a partial, and now I don't. Now I gotta wait for another pullback. Oh no no no. Go back up. Go back up. And then now you're stuck in a losing trade. That is greed right there. Instead of just saying, "Hey, look, I risked 60 cents. I'm up 2 to 1 in 1.5 candle. Let me just take a partial." It doesn't hurt for me to take a partial. And if it keeps riding, I'll take another partial. And then just see where this thing bottoms at. And then maybe even add the remaining shares back to what I have into the stock. Alright, so you take your partial at 120, let it ride, creates resistance, it breaks out. You could take another partial, right? Pulls back, you just let your shares ride. You keep your stop loss right here, it takes you out, whatever. But at least you kept profits instead of holding, instead of getting greed get to you. So that's the first emotion. Our second emotion is fear. Fear may cause you to take profits quick by taking quick profits and not allowing winning trades to achieve their full potential for profit. Your system may no longer have a positive expectancy. Your profit on wins may not be able to cover your losses on losing trades. So now we can say we go back to Roku. Let's say you want to do a super scalp. Okay, so it creates resistance at 161. You want to get it at let's say you want to get it on first candle and look for it to break out a pre-market resistance. Alright, so you buy it immediately. Boom. It opens. It breaks the support. You get a boom. That's it. That's your scalp. That's your trade. Now you have a losing trade for the morning. Instead of saying, hey, let me take a step back. Let me see where this thing. Let me see what this thing does in the first 2 minute candles. And let's look for that direction of the stock instead of just jumping in and automatically getting a break of support. That's gonna shake you out, obviously, because you're risking 30 cents and it drops double of what you're risking. That's no good. That is no good. That is no good. Another example is, let's say you were in this range, right? And then you want to look for a breakout. Let's say you enter right here in this range. Your stop loss is at the break of the range. So let's say bull flag, you buy, and it pulls back on you. Fear. This is fear. No, you know what? That's not a good example. Let's say you buy right here. You see it's gonna go up to pre-market support, pre-market resistance, and then it just drops back immediately on you. Oh no, this is not going my way. I bought here. It was so close to and now it's gonna reverse. Now it got rejected by support, and now it's gonna reverse. Let's say it didn't touch the white line. Let's say it didn't touch the pre-market support, and then it just continues. That's fear. Fear is not sticking to your plan. You're supporting your resistance, your profit, your stop loss, and just selling before it touches, and just not sticking to your overall plan. Hopefully that was a good example. I know that was a little choppy, but I tried my best. Having hope is to be hopeless. Hoping for a stock to reverse is no bueno. Always have a stop in mind. That's what we were talking about at first. Let's see. Oh shoot. Okay. So that's when we got our huge move to the upside, and then we're looking for it to break out to that. This is hope. Hope is emotion. Whoever's in the stock, whoever's controlling the stock is playing with your emotions. If you create a support, a resistance, a stop loss, and an entry point, just stick to it. Stick to it, and just don't break it. Just stick to it. That will save you from hope. That will save you from fear. That will save you from greed. Your profit target, that will save you. Okay. Now, common emotional mistakes in trading. Rush into trades after experiencing few losses in order to win the money back. That's like you're getting on first minute candle, you know, it touches it goes under pre-market support, and then you just get out, boom. It recovers and boom. You know, instead of sticking to a plan, say I want to buy it at the break of pre-market resistance. My stop loss is here. And then that you got a plan there. If it does touch your stop loss, then you just get out. Boom, that's it. That's why I think in some cases, in most cases, hard stops are better. Stops that take you out automatically instead of mental stops, because mental stops could be like, okay, I'm just gonna give it a little more room. Okay, I'm just gonna give it a little more room. I'm just gonna give it a little more room. Oh, okay, I can't hold it no more. So, and it makes, you know, it recovers and it's the trade of the day. Fear of taking the next trade after having a series of losses. This is like Roku when it was over here. So now we just go to Roku. Resistance support. Resistance support. Okay, did it once. Resistance support. Resistance support. Resistance support. When you're having consecutive losers, let's say resistance support, you know, you want to go long, it gets you out. Resistance support gets you out, it gets you out. Resistance support gets you out. And then now this is where that's an example of not sticking to your plan. And overall, stay in a losing trade hoping that things will turn around. That's like this. Let's say you buy here 163, but on the breakout of these tight consolidation breakout, and then you don't take your profits. You don't take your, because it's a quick scalp. You're buying on the top of the move. Why would you want to hold this? So it gets boom. Okay, it's recovering. It's recovering. But, no. Okay, it's recovering. It's recovering. And then you just can't hold it no more. And it just goes. Staying in a losing trade, hoping that thing. Okay, focus on the short-term results and losing the perspective. That's like when you're making money in a stock and you're just totally forgetting. Let's say you're making money here. Okay, so this was a scalp trade. Okay, I got in. Okay, I'm gonna take my partial at 120. Oh, okay, this thing has gone up so much. There's no way this thing can go down. There's no way this thing can go down. Okay, it's making a lower high. That's good. And it ends up closing. And now you just turned an amazing trade into a losing trade. Instead of just having once again, your entry, your stop, your profit target, and then bonus money. Fail to stick to a consistent percentage dollar risk reward. So this is like, okay, I'm risking 60 cents to make 60 cents, but I'm gonna be risking $100 on this trade. And then the next trade you're risking $200 on a trade, and okay, this one looks better. I'm gonna risk $300 on a trade. You want to keep this consistent. You want to lose $25 on a trade. The next one $25, $25, and then when you start making money consistently, week in, week out, month in, month out, then you want to risk it $50, $100, whatever you feel comfortable with. But you gotta take baby steps. This is a business. Constantly changing their trading system and strategies after experiencing short-term losses. This is not sticking to your plan. This is not trading your setups. This is when this doesn't work. I'm just not gonna try it no more. You gotta give it time. You gotta give it time to play out. You gotta give time to your strategy. Like 1, 2, 3. That could be your strategy. 3-bar play strategy. Stick to 1, 2, 3 strategies that work, that you know other people do, that people talk about. Just stick to 3 strategies. Focus on accounts balance instead of the following system. This is emotional trading. This is focusing on dollar value instead of the quality of the trade. This is not having a plan. This is focused on making money and being an overnight success. Then over time, I will become a profitable trader. Get emotionally affected by losses, fear, stress, and loss in confidence. This is when you don't have a plan, when you let greed and hope get to you. When you let hope get to you, all this talk's gonna come back, and then you get your biggest loss of the day. This is not sticking to a plan. This is not having stop loss, entry point, and profit target. Desire to take revenge on the stock market or the market. That is not having what's it called? Not taking responsibility of your actions. The market is a reflection of you and you only. When you're trading, that's the greed that you have is shown in your trading. The fear that you have is shown in your trading. Now think of that. Look back at your trades. Understand them and you'll understand yourself. Trade with methods that do not fit them. Copy others cause of their success. This is like trading ETFs if you're a large cap trader. If you're a penny stock trader and then you see somebody have success in options, you want to try the options. Stick to what works for you. That's gonna cause you that's gonna give you the most, the most success. Not one shoe doesn't fit all in this case, and this is very true. Always habits of successful traders. Now this is what you want to take notes on and just refurbish it. Think of this every day and you will become it. Always take action when there is a valid high probability setup. They do not let fear control their emotions and interfere with in trading. When they have 3 losses in the morning and they're still able to take another trade, they know that their trades have a positive expectancy, and if they do it long enough and they do it enough, they will come out green. Even if they're only saving 1 day, that's a part of the strategy. That's a part of the consistent growth in their trading. Like we were talking about, take responsibilities and learn from mistakes and move on. They don't dwell on setbacks. They realize their mistakes, they write it down, and they say, hey, I made a mistake here. Let's try not to make it next time. Let's try a little bit better to make it next time. You can always be better tomorrow than you are today. And that's that simple. That's that simple. They expect and accept losses as a part of trading game. So they expect losses. They know that they're coming. They know that they're part of the game, but they don't let them shake out their interference. Like, let's say they got it long here, stop loss here, and then they get stopped out. They know that they can always get into the next trade, that there will always be another opportunity, that there will always be another day to trade, and that it's not the end of the world. Just gotta move on from it. Focus on the trading system and not the immediate account equity. Now, to help you with this could be like hide your P&L, hide how much you're making on a trade, hide your account balance, and it will tremendously help you. Think statistically and keep a long-term perspective. This is like, okay, if you know, if Roku is in a long-term uptrend, you know, and the market keeps making higher highs and higher lows, and we have another resistance on the to the upside, you know, we can expect this. The expectation is to the upside. Now we'll have our stop loss set. We'll have our trade set to for however this stock wants to play out. You just be ready for it. Oops. Okay. Focus on being consistent. Consistency follows predetermined entry and exit rules. Consistency is not only you making green trades, but this is following your plan, having a stop loss each trade, having a profit target each trade, having an entry rule each trade, not chasing a stock each trade. This is consistency. Consistency is not only green. Just because you're green doesn't mean it was a good trade, but green is not bad either. So be patient. Wait for only high probability setups. Let the noise, let all the choppiness. If you see a stock that's choppy, you know, for the most part, like Tesla, avoid it. If it doesn't have a clear direction, avoid it. It's that simple. You don't want to be trading a stock with huge wicks, and you know, you can't even trade it properly. We could probably pull up Tesla. Look at this. You see all these wicks? This is not something you really want to be in. You know, this is not something you really want to be in. You know, you get a breakdown entry. Then you get some wicks to the upside. This is ugly. This is ugly. You know, now Tesla does really does have a lot of opportunity, but be careful. Just like make sure the volatility is good, make sure the volume's good, and just just avoid stocks that are trading sideways. The biggest enemy to your trading success is not the market, but yourself. So start taking responsibility of your actions. The market is a reflection of yourself because you're the only one that has emotions. The market is just there. You're the one that takes the entries. You're the one that takes your stop loss, and you're the one that exits too soon. So, you know, grow up, suck it up, and just learn from your mistakes. A good trade is one where you follow the rules of the systems and not one that led to a profit. And that concludes this little video of habits of trading, of winning, habits and trading psychology of winning traders. I hope you guys enjoy. My voice is getting dry and raspy. But I hope this helped you guys. I hope you guys took notes and hope you guys learned something from this, and please like and subscribe. Leave any comments down below of any kind of videos you want to see, and